Hello, investors, and welcome to yet another 180 Markets weekly wrap. Well, friends, the list of market negatives, unfortunately, is growing. Firstly, we had US 10-year Treasury yields break significantly through that 4% barrier up to about 4.18% as we're filming right now. And friends, when bond yields go up, it does make it harder for equity prices to keep moving forward. But on top of not only the bond yields, we're also starting to become into the seasonally weakest time of year, that is September, October. And also adding to the mix here in Australia, earnings season is largely behind us. So we don't really have that big catalyst or that big hopeful point to look for as well. Then on the sentiment indicators, complacency levels are certainly now trending much higher at circa 12 to 18-month highs. And finally, as a contra indicator, we are seeing some of the very well-known strategists, people at Morgan Stanley and the likes, that are throwing in the towels and becoming bulls. So with all those factors in place, and also starting to see some market softness, we're certainly watching very carefully and also taking a slightly more cautious stance. Now, before I turn it over to Sean, as I normally do, I just want to tell a little story about what happened this week, because I think there's a lesson in it for everybody. Stephen Cohen is probably one of, if not the greatest trader investor of our generation, worth circa $25 billion. And he also happens to own the Major League Baseball team, the New York Mets. Well, about a year and a half ago, he bought two of the greatest pitchers in baseball for about $90 million. Well, fast forward to this week, just 18 months later, he let both players go and effectively more or less lost that entire amount of money. The lesson, though, is that taking losses sometimes, although painful, it allows us to move forward, and it happens to the best of the best, so we're all never alone. And now to turn over to capital raises and really to go on to the markets themselves this week, I'll turn it over to Sean.
Sean, are you ready for the wrap?
I am ready for the wrap. Let's give a wrap. Carlton beat Collingwood by 16 points, and I'm watching the replay. King Charlie scored 6 goals. You want the weekly wrap, the stock market wrap? I'll give you a wrap. It was a very boring week on the market, and I had much more exciting things on my mind, like Carlton. But if we're going to talk about the stock market, we're going to have to talk about a lot of downs and a lot of placements. There were 30 raises this week. I think that's almost a record. So we have been busy here at 180 Markets, but from the trading side, it has been really slow. All right, let's start off with ACW, because this used to be a former favorite of mine, Actinogen Biomed. Now, let's just bring up the 5-year chart before we look at this placement. This one was trading at exactly this level in 2020. And when they appointed a new chairman who invested $500,000, they went up to 18 cents. Since then, they have been really disappointing. And if we look at let's look at the 1-year chart, they have gone all the way back down to 2.9 cents. Now, they announced a rights issue for $10 million. The disappointing part for me as a past investor is they're doing it at a very low price of 2.5, but they are including a 1-for-2 free option at 3.7 cents. Now, that's a big dilution, and it just entices people to sell the shares and keep the options. The MD chairman is investing more in this round, which is obviously good to see. IXU is raising $4 million in total, $2 million through a placement through Signet Capital. That'll be done at 6 cents a share, and each share comes with a free 1-for-2 free option. They were trading as low as 2 cents recently, and they have bounced pretty well. They've had quite a lot of good news flows. So hopefully for shareholders like myself, it'll be onwards and upwards from here. GCM. Now, Slightly disappointing. They went out to raise 3.2 million, I think. They ended up taking 1.7 million at 1.3 cents a share. There have been quite a few raises this week falling short of the main target. So slightly disappointing there. They did have a pretty good run up just from here to here earlier this year, but yeah, back down, and hopefully 1.3s will be the lows. Now, LNU, Linneus, completed their 567th raise for this year, I think. I just can't count anymore. They are the serial raiser of the ASX. They raised $1.2 million at 0.25 cents a share. Now, something pretty interesting that I thought I'd read from the announcement about the capital raise. They at the bottom here, they said that they're using the funds, and the company is in a position to rapidly improve its cash on its path towards profitability. Now, I've heard that thousands of times from this company, and if that finally happens, I think, yeah, I'll be surprised, and maybe they won't do their 590th raise later on in the year. Strandline was a pretty interesting raise. The code is STA. So they raised money at 18 cents. They're already trading under. But if we look at the chart, it actually fell before the capital raise, which is pretty interesting. They did take more than what they went out to take, which is obviously good. But yeah, this one has been a very bad performer, trading as high as 50 cents a year ago. I do think it was trading come raise because a lot of people knew that this raise was happening. But yeah, hopefully it bounces from here. Now let's finish off with two raises done at a premium. PAM, the first one, Pan Asia. So they did go out to raise quite a bit more, but obviously because the raise was done at a premium to the price of 23 cents before the raise, they only ended up taking 1.2 million. But I'm going to read what the chairman said, because he put in $500,000 into the raise. And if we go down here, the chairman said that PAM has a potential to be one of the lowest cost lithium chemical producers. He wrote, purchasing PAM shares at 25 cents based on a market capitalization of about 35 million is a no-brainer. So Mr. Camera Boy, I don't know if we're going to follow him on that, but let's definitely watch him, and we'll look back and see if this was a no-brainer. Finally, WAK, they raised money at a premium as well, $7.7 million at 17 cents a share, which was a 26% premium to the previous price. And that was done to an investor called Stanco. And Stanco already has an offtake with WAK Olin, and this will just extend that. So yeah, good to see WAK Olin having a good week and raising money at a premium. Other noticeable raises this week, we said that there are a lot, but other ones we saw on the platform were HPC, AM7, TMB, SHP, and there were quite a lot more. All right, movers this week. As we said, there were a lot of downs and there were a few ups as well. Very frustrating week on the market, especially from traders. The volume has dried up. And what's more frustrating is that the US market has been going up. So it adds more risk to the market, because if we have a fall, then you know what happens. Let's start with AZS as an up. This stock just keeps going up and up and up. Let's just look about 3 months ago. It was trading at 40 cents over here, and they have just released announcement after announcement, good news after good news. It's a lithium company, and they announced just this morning another 209 meters of high-grade lithium intersections at the Andover project. Now, I mean, that's pretty good grades, 1.42, but that is massive. So, yeah, look, the market's now factoring in a lot of good news for AZS. And let's just actually look at that 10-year chart, because I remember I was a shareholder back in the day. They actually were a shell. I actually think it was further back, but yeah, this is what we call dreams are made of, because this has had a massive run. AW1, another big runner. Let's look at the chart. So about a month ago, they were trading at 6. Today, 25.5. They announced on Wednesday a major copper discovery confirmed at their Storm project. So even it's been trading on massive volumes. They have done 2 capital raises in the last 8 weeks. But first one at 10, second one I think at about 15, but don't quote me on that. Now W2V, way to that. It's good to see them finally going up. This week they pretty much went up about 70%. No news this week, but last week they announced their cash flow report, and it looked like it was improving. This company floated at 20 cents in 2021, so it was just 2 years ago. I do remember there was a very popular raise at Canaccord, and they did open at 27 cents. And since then, it's been all down. It's an Israeli company, and Big Boy Amos would be feeling very happy this week after the share price has finally gone up. But obviously, there's a lot of room for it to keep going if they hit their targets. LSR, now that's suspended, which is interesting because they went up over the last week, pretty much doubled. In fact, they more than doubled. They were trading at 0.4 the beginning of last week, and they finished at 1. So they're now suspended. They did announce significant copper intersected, which is great to see, but I'm not sure why they're still suspended. Maybe they've got more news coming. I mean, not maybe, they definitely do. Now, finally, another up, RKT. Now, it hasn't gone up a lot, but they did present this week at the Techno conference, which we were at, and it did sound pretty good. And I think, I mean, it's not massive here, but it's gone up 30%. Just based on that. So there's been no news, and the Techno conference obviously impressed a lot of people, and there has been quite a bit of buying. Downs. Now, there were a lot, but let's just look at the big ones. MSB, Metablast, that one has fallen 53% today. So, wow, that does not look good at all. They were trading at $1.40. They must have fallen before the news as well. So, yeah, they announced some pretty disappointing results from the FDA. Obviously, the FDA wants to see a lot more. And, yeah, they... I remember that they were once a massive runner, but we've got to go all the way back here. Camera boy, I don't know where you were then, but back in 2010, they did run from $1 to $9, and like all biotechs, it's a long-term game, and it's not easy for them. Now, SVR was another big down. Yeah, so they fell yesterday. They gave a market update, and they just advised the market about the current trading conditions, and obviously it's not good for them. So the share price which was trading at $1.75 before, is now all the way back to $1.10. So hard times there. All right, as I said, there were a lot of downs. I'm not going to go through all of them because why go through bad news? At least we've got the weekend to look forward to. Turn it around, camera boy. Let's bring on the Saints. Da, 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 da. Have a good weekend, everyone.
Thanks for watching another 180 Markets Weekly Wrap. If you want access to thousands of capital raises, sign up at 180markets.com.au and you'll get access to our very next categories. Thanks for watching.